Thank you very much. Following Professor Tirol's very thoughtful address, I'm very pleased to welcome everybody to the third session of our conference focused on the role of big techs and as critical service providers of financial institutions. My name is Juan Carlos Crisanto. I work at the Financial Stability Institute, and I'll be guiding you through this session. So to provide some context to our discussion this afternoon, let me just recap a few of the concepts that we have been going through, plus bring into the discussion this policy analysis work that we have conducted together with research here at the BIS. So Agustin Constance started the day by mentioning that big techs rely on a cutting-edge technology in order to take advantage of large amounts of data across their activities in order to keep their clients happy, to attract more clients, but also to make their businesses grow. Therefore, he highlighted a symbiotic relationship between data and technology in the context of at the heart of big tech's business models. Due to this, big techs have been heavily investing in developing or acquiring state-of-art technology in data analytics, artificial intelligence, machine learning, but also best-in-class frameworks for cybersecurity, for data privacy. So these investments, plus the challenges that we were mentioning earlier today about the ability of financial institutions to deal with legacy infrastructure, has given big techs what we have been calling a technological superiority, which very much underpins their role as critical service providers of financial institutions. And of course, we discussed this morning that the role is very evident in the context of cloud computing, where these big techs concentrate, where a handful of big techs concentrate around 70% of the cloud computing market. And we were discussing that large parts of the financial sectors have already moved or are in the process of moving to the cloud. And this is important to highlight also something that we discussed earlier today, that this technology brings to their operations a lot of benefits, not only in terms of cost reduction, but also in terms of productivity, also in terms of enabling digital transformation, and many other benefits. So from a public policy perspective, the discussion here today is the role of the big techs in the area of cloud computing, but more broadly in technology, raises two areas of concern. Number one, the large, but I would say the excessive dependency of financial institutions on big tech technology. And number two is the concentration of this technology in a few large players. And of course, these concerns are manifested in single points of failure in the functioning of the financial systems if big techs were to experience significant disruptions in delivering these critical services. And of course, this raises a number of alarm bells in the minds of financial sector supervisors related to financial stability, related to consumer protection. So to discuss how financial sector authorities are viewing and are responding to these potential vulnerabilities, I'm delighted to be joined by Marlene Amstein, Chair of the Swiss Financial Market Supervisory Authority, Finma, Marcel Hack, Director of Financial Services and Capital Markets Union at the European Commission, and Duncan McKinnon, Executive Director for Supervisory Risk Specialist at the UK Prudential Regulation Authority. Duncan is joining us virtually. But I'm also very happy to have in this panel someone that comes from outside our tribe. Maria Zani, Head of Financial Services, Public Policy and Regulatory Affairs for the EMEA region at Amazon Web Services, to discuss how AWS is viewing these potential vulnerabilities. So welcome, Marlene, Marcel, Duncan, and Maria to this session, and many thanks for taking the time to join us today. So in terms of the structure, we will follow a very similar structure that in the previous panels. We have agreed for some brief opening remarks. No more than 5 minutes has been the agreement. After that, we will engage in a series of questions and answers. And following that, we will be opening the floor for questions from the audience. Okay, without further ado, maybe Marlene, may I ask you for your opening remarks, please?
Thank you very much for having me in this panel. And maybe I'm going to stick to the 5 minutes. I'm going to try. But maybe before I go into my introductory remarks regarding outsourcing, let me say a word or two on Libra, because Libra has been mentioned several times in the morning sessions, and Finma has been obviously heavily involved. It has been quite an experience over 2-3 years with different types of business models that Libra presented to Finma. And maybe just three general findings that I think also are informative for the general topic of outsourcing. The first one is I really very much enjoyed Gillian's view, anthropological view. So setting out the problem as a problem of different tribes. I think that very much hits what we also perceived during the discussion, not just with Libra, but generally. So Finma is an integrated supervisor. So aside from banks, we also have insurance companies, collective investment schemes, and financial market platforms. And it's more or less the same everywhere when we discuss with fintech, and particularly also with big tech companies, that they are predominantly tech and we are predominantly fin. And so it really needs to come together. And so this is, I believe, one of the first learnings that we from our side, from the authority side, we need to reach out and we need to lower this superiority, as you mentioned, this technological superiority, and that's definitely what we've already done and what we're in the process of doing. So we've also added just very recently further experience regarding artificial intelligence and so forth. So I think it's really important to close that gap. And then my second remark is a little bit more down to earth, I would say. And this is an aspect that might have not been mentioned so far in the discussion. I believe a key to the solution in the exchange and regulation of fintech is the licensing process. So far, we have the bank license, we have the insurance license, we have the payment license, and so forth. And the fintech and big techs, they do not think along these lines of concepts. That was particularly present and obvious in the case of Libra. So luckily, in the case of Switzerland, we have a payment system that does not only ask for all the usual payment system requirements, but in addition also allows to have to install requirements that are taking care of bank-like risks. So to the extent that a payment system takes capital or liquidity risks, we can impose this bank and liquidity risk measurements within one license. And this is just one example, and I think along those lines it's important to think. So certainly do not have up and ready a solution, but I think the licensing process is really key. What we try always try to do is to have these broad business models and then to squeeze them into a pre-given licensing process. And I think we should start to think more in a more flexible way. And my last word on Libra is the importance of international cooperation is really absolutely obvious. So the colleges were absolutely key. So most of big tech is cross-border, and there we only gonna solve the problem. So one of the main ingredients of the solution, I'm sure, will be the international cooperation. So with that, so hopefully that's fine. On Libra, just say a few words also now on the outsourcing. Let me briefly sketch the landscape, the outsourcing landscape of Swiss financial institutes. Three observations. First, the general topic of outsourcing, so not just referring to ICT and not referring only to big tech, that we discussed today affects literally every financial institute. So the overwhelming majority of financial institutes, at least to some degree, rely on external service providers. So the model where the full value chain of financial service would be covered under just one roof, that business model is basically gone. It's gone for the small banks, for the big banks, it's gone for the insurance and also for the collective investment schemes. The second observation is once financial institutions start to use external service providers, they do so using not just one service provider, but usually many. So in the case of Switzerland, we find that 80% of the Swiss banks, they use between 5 and 10 external service providers. And this immediately already illustrates some of the challenges that comes with those outsourcing relationships, because each and every of these relationships needs to be managed. There needs to be a proper due diligence process put in place. Then the auditing rights need to be secured, and also these reviews need to be done on a regular basis. And the third observation is at the very top of the list of the external service providers, quite often are exactly the same names. So this really speaks to these concentration risks. In the case of Switzerland, these are, as of now, mostly Swiss names. But we have a list, and we do this survey on an annual basis, and we see that the foreign and the big tech service providers, they gain in importance every year. So this really clearly sets the floor that it's important also for Finma to do something about it. And faced with this challenge, we had three options: either rely on the existing regulations, apply or increase capital and liquidity buffers in order to make sure that when accident happens, that those losses can be absorbed. Or the third one, to introduce dedicated rules on digital operational resilience. So in the same way as the EU also did for DORA, I'm sure we will cover this in a minute. Also, Finma opted for this third option. So specifically for this year, Finma has a strategic goal. So we have a very active stance when it comes to operational resilience, and we have the strategic objective to increase these operational resilience, specifically regarding cyber attacks. So already over the past years, we've increased the on-site visits, focusing on cyber attacks by 4 over the past, I believe, 5 years or so. Then second, within this active stance that we take, particularly also regarding cyber risks, we very much focus on concentration risks, because that's really, to us, seems to be at the core of the risks. And third and last point is that Finma always takes a technology-neutral approach. So there was this morning also the discussion whether same risk, same rules still apply. Actually, I'm still a believer in same risk, same rules, maybe less in the sense of activity versus entity, but more in the sense of principle-based versus rule-based. So we have a technology-neutral approach also when it comes to outsourcing, in the sense that we do not aim to regulate a specific technology, not regulate specifically, for instance, cloud, but we aim to regulate the risks that come with a particular technology. And with that, I'm way over 5 minutes, sorry for that, and I'll rest it here.
Thank you very much, Marlene. That was very, very interesting. I mean, we should come back to this issue of concentration risk. I think this issue has come up very clearly in our discussions, but Before that, Marcel, may I ask you for your opening remarks, please?
Yes, thank you, Juan Carlos. And I believe I can build on what you and Marlene have said. So there is this increasing importance of ICT for the financial system, and as a consequence, we see that tech companies, ICT providers, are providing services to financial institutions. I think that's the secular trend of digitalization that we see at play also in the financial sector, and then naturally the big providers of ICT services, i.e. the big techs, are playing a significant role to an extent that the big techs are now crucial for the operational continuity of our financial services ecosystem. That's essentially also what you referred to. On top of this, we also see that an increasing interest of the big techs to move into the financial services sphere, be it through corporations, be it through the offering of financial products or services themselves. That is a trend. Although we have to say that that big techs are currently not really materially significant for the financial system, at least here in Europe, but maybe across the world. Now, what regulators do, and that is what the European Commission does, is it asks itself the question: is our regulation still fit for purpose? And that is what we are constantly doing. And in this case, we have acted in several areas already. One is the area of the operational resilience of our of the ICT services in finance. That is something we did with the DORA regulation, which is now on the rule book and will enter into force in 2025. And here we recognize that there are some key players that can have an impact, a negative impact on the operational resilience of our financial system, and we conclude that they have to be properly monitored, and DORA establishes a sui generis oversight system to do so. Then we also looked at, in particular, market power, and that we did not specifically for the financial sector, but more broadly through the DMA, but also through the Data Act, and we heard about this in detail from Jean Tirole. So the European Union has looked into two specific areas, which are the operational resilience of ICT infrastructure for the financial system, and questions related to market power and fair and open access to what we call now in our legislation gatekeepers. But by all means, this is not the end of our analysis. We have not looked at at all aspects. We continue to do that. We will look at, in particular, the cumulative effect of the control of huge amounts of data, financial and non-financial, combined with activities in the financial sector, and a critical role when it comes to the provision of ICT services to the financial system. We continue to monitor, and we will act if we find that will be necessary.
Thank you very much, Marcel. We shall come back to a few more precise elements of the DORA framework, just to discuss a bit more in detail in a little time. But let me now pass the floor to Duncan. Duncan, can you hear as well?
Yeah, very clearly. Thank you, Juan Carlos. Can you hear me?
Yes. Thank you very much. And please, may I ask you to take the floor now?
Yeah, thank you. Well, thank you for inviting me and also for enabling me to participate virtually. And good afternoon, everybody. I have a lot of points in common with what Marlene and Marcel have already said. So I'll just focus on a few UK points, which there's a lot of commonality, I think. It strikes me that we have been on a journey as a regulator at the PRA for several years now on operational resilience, and we started with a policy that is directed at our regulated firms, all the banks and insurers operating in the UK, and seeks to ultimately to ensure that they can reliably service their customers and operate in markets on a continuous basis. And underneath that, we've also looked again at our outsourcing policies and reliance on third parties, and with an eye, of course, to cloud outsourcing in particular. But as Marlene has already said, we also believe it's appropriate to seek a technologically neutral approach as a regulator, and we therefore aim to focus on the ultimate outcome in terms of the services that our firms, regulated firms, are providing. I think it's just worth me noting that we may come on to this, that further development in our approach in the UK, which is very much still in its early phase, relates to seeking some oversight of critical.
I think we're losing you, Duncan. Can you hear us? Duncan?
On UK markets. So we are developing that.
Sorry to interrupt. I think we missed 2 minutes, probably a little bit less. Sorry. Could you just repeat the last few sentences, please? Just to, because we lost you there.
Okay, sorry, Juan Carlos.
No.
So I was just saying that the further development on our sort of operational resilience policy journey in the UK for the financial sector is it relates actually to what we call critical third parties. So those firms, such as quite probably some of the major cloud service providers, but other firms as well, whose importance to the financial sector has grown to such an extent that if they were to fail, or if they were to have a cyber attack or another operational outage, that would actually cause systemic impacts in UK financial markets. So the government has legislated to enable the UK regulators, including the PRA, to have oversight of those firms, and we're developing that approach now, and so we could come back to that later. I think, given time, Juan Carlos, I'll just finish up with one point, if I may. I mean, it strikes me that comparing with all of the work that prudential regulators do on financial resilience, there are a couple of things that are particularly challenging thinking about operational resilience. One is just the sheer dynamism of this area, the speed with which technology is changing the financial sector, I think makes this hugely challenging. And I think it also is one of the reasons why it's very difficult to get a data series that really is useful to calibrate or assess policies. And for that reason, one point that we emphasize very strongly to all of our firms is they need to assume failure. They should not try to work on the basis that their own operational resilience is such that the probability of failure is low enough that they can tolerate it. We are constantly reminding them that they should just assume failure, whether that's in their own systems or in those they're relying on in third parties, and then work out how they recover and how they mitigate the impacts of such a failure. And I'll stop there. Thank you, Juan Carlos.
Thank you very much, Duncan. I'm sorry for the virtual complications, but I mean, I think I would like to come back a bit later with trying to find out a bit more about what you are seeking in terms of oversight powers in order to have a oversight of these big techs or critical service providers. Okay, thank you. Let me pass now the floor to Maria. Maria, please.
Thank you, Juan Carlos. And I have to say it's a real honor for me to be here today, personally and on behalf of AWS, to present our views on these important issues. And we're absolutely committed to the dialogue with regulators and policymakers. We believe it's absolutely important in terms of exchanging ideas of what it is a fast evolving environment in which we are operating and financial services are operating. So thank you again for inviting us. Just to put things in context, I thought I would start by kind of talking a little bit about where we are in terms of this modernization process that we've been talking about in terms of cloud adoption in particular. And it's relatively early stages, I have to say, in terms globally, in terms of the level of adoption of cloud. Certainly gaining momentum, but if you look at the percentage of IT spending that is dedicated to cloud, if you look across industries globally, we are talking anywhere between 5 and 15% of the total IT spending of firms. And in the financial services sector, there's some estimates that point that only 3% of core systems are actually on the cloud. So it's, I would argue, very, very early stages. Before I move on to my next one, I wanted to talk about the Gillian's point about the tribes. I should have started by that, because so I joined AWS, just for everybody's awareness, 3.5 years ago. And I was in banking for a long, long time, dealing with regulation. And I have to say, I spent the first year of my life at AWS acting as a translator between my teams in AWS and the regulators. So I thought it was very interesting, this idea of different tribes and how we communicate with each other. But I'm hoping to make a small contribution in that regard. And these type of dialogues actually really help. So anyway, I wanted to say that before I move on. Now, when we talk to our customers in the financial services space, we see they're facing 3 different challenges in terms of how they deal with the legacy IT. First one being that they are struggling to deal with risk management when it comes to cybersecurity, that the tools they have in place are really not fit for their current cybersecurity landscape. The second one is resilience, that they're not able to achieve the level of resilience that is expected from them. And especially after COVID, this kind of went up in the agenda for financial services and regulators, of course. And the third one is that the IT infrastructure they have really don't enable them to keep up with customer expectations of what's demanded from them. So those are the 3 challenges where when they come to us and they look to cloud and technology, those are the three areas where we're seeing our customers actually look to us to support them. So what was perhaps originally a discussion more around lowering costs in terms of this idea of moving to the cloud to lower costs is now much more focused around enhancing resilience, enhancing cybersecurity, and actually doing things that they couldn't do before with the technology they had. And for example, customer experience is one of them. Perhaps on the cyber topic, because I know it's top of mind, and I was 2 weeks ago, I was at a conference organized by one of your tribe, Andreas Dombret, and the issue of cyber kept coming up in what he calls a polycrisis world, and the issue of cyber kept coming up. So if I allow me to spend just a couple of minutes on this, what we're seeing in terms of the cybersecurity landscape is that what are known threats, and I include in that bucket DDoS attacks, so distributed denial of services attacks. And for those who are not aware, what this means is those malicious attempts to affect the availability of a service, website, or an application by generating large, huge volumes of requests that ultimately overwhelm the system. Ransomware and state-sponsor attacks, those have really increased throughout the last year. But the good news is that those are preventable if you have the right security fundamentals in place. Obviously, the pandemic and the risks of pandemics and the war in Ukraine have put resiliency also and the importance of business continuity at the top of the agenda as well. And those are kind of the threats that we know about, so that we can do something about. So there's obviously those that we don't know about. And because this cybersecurity landscape is changing so fast, we need to continue to innovate as the cyber threats continue to innovate. And in that regard, what the scale of a cloud provider like AWS allows is for our world cloud security experts to continue to be continuously innovating to address those potential threats. And with this proliferation of both known and unknown threats as it continues, we believe this will continue to drive the shift to the cloud. And this innovation that the cloud provides in terms of securing data, and I think it's worth noting that encryption, for example, the level of encryption that cloud allows is not allowed in old legacy technology. So again, as this innovation kind of enhances the security posture of firms. And I think that comes with this whole shift to the cloud, perhaps comes with other challenges, which is, for example, skills within the firms and also within the regulators. And we are seeing within the firms that IT leaders are pointing to cybersecurity as one of the domains where there's a real shortage of skills. So one of the things we do at AWS is work with our customers in retraining the workforce. And I'll leave it there, and I know you have questions about.
Yes, I have a few questions, and I'll come back to the issue of, it's very clear and very informative to learn that financial institutions are coming to AWS for not only cost reduction, but very importantly, achieving more resilience, in addition to digital transformation, innovation, etc. So the question I will be asking you, and I give you a little bit of time to prepare, is, how can you assure us that operational risk cannot become financial stability risk, and what are you doing in order to help us with that? So I'll come back to you in a minute with that, but let me get back now to the initial remarks. And Marlene, come to you, because you mentioned very interesting sort of the way you are designing the regulation, technology neutral, principle based, and then you said licensing. And for me, the question I wanted to understand is how licensing fits. I mean, do you mean that you are planning to provide licenses to critical service providers? Is this what you meant? Just a clarification point. Secondly, you made a very interesting point about that you, as a regulator, assessing concentration risk. Now, concentration, and you were seeing how big techs were growing in your markets. I mean, could you elaborate a bit more, because colleagues around the world might be interested in learning a bit more of how you do it. Just a little bit of more particularities on that would be very much appreciated. Please.
Thank you very much, and sorry if I have confused that a little bit. So the licensing there, I referred more to the Libra example, where we really had this platform license, where in addition to the usual requirements, you also can take care of bank-like risks within one licensing concept. So that referred to that remark, and not specifically to the outsourcing aspect. When it comes to the second question on the concentration risk, well, there, as of now, and to me it seems that's more or less what everyone does so far, you basically collect the information, and you see, and you get a map of your supervised institutions, where they are outsourced, and to which extent they are outsourced. But as of today, in our case, for instance, we can only do on-site visits abroad, for instance, only at supervised institutions. So we do not have a legal framework as of now, even though this is under discussion, that we could go abroad and have then on-site visits at a not supervised institution. So I think this is very much still work in progress. So similar also as in DORA, one of these requirements is that supervisor have a clear view and map of the landscape, so that we know, okay, which of the supervised institutions do outsource which capabilities to whom. And essentially, I would believe that once we have these maps in our own jurisdictions going forward, and looking at this topic also being so prominently here in Basel being discussed, and not only here at this conference, but also in different committees, I would expect that we move towards a world where not every supervisor would knock at the door of one of the big three, so Amazon, Google, and the like, with more or less the same questions, but that there would be somehow a standard that would be found, or maybe even to some degree a cooperation and collaboration among supervisors, because it's basically, yes, it's more or less three or a few big tech companies and many supervisory authorities. So I could see that at least there will be some discussions to go in that direction. But as of now, it's more or less stock taking.
And you mentioned that the experience with Libra, with supervisory colleges, provided a nice inspiration for this idea of international cooperation and collaboration. Perfect. Now it's clear. Thank you very much. Marcel, coming back to DORA, one of the main, I would say, developments in DORA is this ability of financial regulators to directly oversee information and communication technological providers, especially critical one. So this direct monitoring, I mean, what do you envisage with these powers, with this enforcement ability that financial regulators? I understand there will be a lead overseer together with a sort of a group of support to this lead overseer, and this will be on the European and supervisory authorities, correct?
That is correct, but maybe let me add a bit to this. So our point of departure is that vulnerabilities in the ICT world can translate into risks to the resilience of the financial system. So from the point of view of the regulation and supervision of the financial system, here we have a gap that we need to address if we want to ensure the resilience of the financial system. If we don't do that, we have an opening there a door through which risks, unmanaged risks, can enter the financial system. Now. That's where DORA comes in, and that's what we try to address with DORA. And we address this by, first of all, introducing a number of safeguards that the financial institutions have to introduce when outsourcing, and when using ICT providers for their services. And then secondly, through the introduction of an oversight system for critical infrastructure providers. We have called this oversight and not supervision because it is not supervision. We have introduced DORA introduces a number of supervision-like elements. So you have inspections, you have information requests, you also have sanctions ultimately, but fundamentally the oversight means a much more cooperative, collaborative way of allowing the authorities to work with the providers on appropriate systems and on managing the risks. And with this, of course, we take into account, the specificities of the ICT world, as Maria explained them. But we're also building on international models, so very much on how SWIFT is operating in this area, and we think we're pretty much aligned with international practices and standards here.
Thank you very much for that, Marcel. Let me move to Duncan. Duncan, I mentioned that I was hoping to come back to discuss what are your expectations in terms of the requirements that, understandably, they are still work in progress. They are still sort of designing them. But what are the initial or preliminary thoughts about the expectations that you may have with regard to the use of financial institutions and how they manage the business relationships with large third-party service providers? If you could give us a little bit more of detail. And also, when you're saying that you're seeking some oversight and enforcement powers, what you're thinking about at this stage, please.
Yeah, thanks, Juan Carlos. I might come to that first, if I may. I mean, I'm keen to support and agree with what Marcel just said about the difference between oversight and supervision. I think we see it in a very similar way. When we are supervising our banks and insurers, the PRA-regulated firms, we really do want to know how their business is operating in very great detail. We expect them to tell us anything that really we ought to be aware of, and it's a very close and continuous working relationship. And I think it will feel and be somewhat different in relation to the critical third parties. That said, there's a long way for us to go to establish a model and a framework for doing this oversight. So, there is a lot still to do there. To come to your question about sort of what sorts of things we have in mind, I mentioned earlier that this part of the framework we're now developing on critical third parties is, as we see it, all underneath the overall agenda of achieving operational resilience in the financial sector. And in our view, it follows on from that some of the concepts, anyway, will be common across what we expect of our regulated financial sector firms, also those concepts being common with what we will then do in relation to overseeing critical third parties. So, for example, in our existing operational resilience policy for banks and insurers, we talk about requiring them to think about severe but plausible scenarios. And we would expect them to think about internal operational failures. We would expect them to think about cyber attacks, of course. We would expect them to think about physical risks. And we would and we will test them on whether they've really developed credible scenarios that push their ability to withstand these kinds of events, to a very, very severe degree. And we will obviously need to do quite a bit of work to think about what is severe enough, what sort of an outage within the firm or in one of its key suppliers is appropriate for us for them to test themselves on. And that idea of a severe but still plausible scenario, I think, is one that we will also use in relation to critical third parties, and they similarly face all of those risks. And I think we would, for example, if we're talking about one of the largest critical third parties globally that is effectively becoming systemically relevant in UK financial markets, then I think we would start from the supposition that it should be as resilient. It would need to be as able to withstand scenarios every bit as severe as we would expect of one of our large regulated banks, for example. And in a similar vein, our approach to testing, what is good enough testing that a firm undertakes, would also, I think, we think of it in a similar way. So there's a long way for us to go on both policies, both in relation to the financial sector and to third parties. But I think a number of the key concepts will be shared. And just then to finish on powers, and the UK government has legislated to give the PRA and the FCA powers in relation to critical third parties. I think, again, a little bit in line, I think, with what Marcel was saying. We won't necessarily rush to use powers. First of all, we will try to achieve outcomes, through dialogue and consensually wherever we can. That is our customary approach. But we obviously need powers. We need to be able to act in certain circumstances. And I think one thing that we would expect to use, for example, is very probably being able to rely on an expert third party. So we have a framework already where we can require a bank or an insurer to enable an expert consultant to assess some part of their business, or in this case, the resilience of some of their IT systems, for example, And I think that idea is also available to us in the new powers that we will have in relation to critical third parties. And I think then that will then bring us into a debate around, what kinds of testing the cloud service providers, other critical third parties are already doing, under what kinds of frameworks, whether in the UK or in other jurisdictions, what reliance we can place upon those, and then what incremental work we may believe needs to be done. And then if I just might go back to one of the points that I think Marlene made in her comments, we also think that it will be much more efficient and effective if we can share this work internationally and rely on one another's efforts, given obviously some of the key players in the among the critical third parties are global businesses. So I think we would certainly be willing to rely on others testing in this kind of space, but we will have the power to require our own tests to be completed. Thanks, Juan Carlos.
Thank you, Duncan. It was very interesting to see this commonality about this willingness to share work, experiences, and try to find ways of collaboration and cooperation internationally in this arena. I mean, just to clarify one point, does your powers also require requests for information to the critical service providers? I assume yes, but just wanted to get your confirmation.
Yes, that's right. I mean, I think that's sort of point one in the in the legislative powers. Yeah.
Perfect. Thank you very much. So, Maria, coming back to you. I hope I didn't put you under pressure, but.
I've been under pressure since I got invited to join the panel, but
we,
there we go.
But we've been treating you very nicely.
You have
so
been
far.
very much.
Yep.
Yes.
Thank you.
I think another commonality here is, and we talk a lot about resilience and security of the financial services sector as a whole, and we have that in common. We share that objective with regulators. We work day and night to ensure our security and our resilience are way above regulatory expectations. It is our top priority. It's embedded into everything we do, from designing our own chips to choosing where we put a data center. And you could not imagine the level of detail that goes into even choosing the right location for a data center in terms of thinking of the risk of earthquakes. You name it, it's built into what we do. So we share this objective, and I wanted to make that clear, because sometimes it doesn't come across the point. And in terms of how we provide assurances, well, we are working regularly, obviously, on third-party attestations and certifications. I won't even try to mention them all because there are hundreds. But what I wanted to touch on is, besides our responsibility of us as a cloud provider to our financial services sector, one thing I think it's important for regulators, policymakers, and supervisors to consider is the shared responsibility model that we operate in the cloud. And this shared responsibility model, for those who are not aware, is basically means that we as a cloud provider we look after the security of the cloud, whilst our customers, in this case financial entities, look for their security in the cloud. And I'm absolutely conscious that it requires a change in the mindset of how supervisors approach supervision. But it's absolutely important. And I do have an anecdote about a supervisor who once told me they like touching things. And I do question whether this methodology of touching things really works in the context of cloud, right? Because when you're looking at the security of a firm, you really need to think in other terms when it comes to cloud. So really the controls and the practices that we put in place as a cloud provider are just half of the story. The other half is how the financial firm is implementing these controls and practices. And what cloud allows is for firms to actually make conscious decisions in terms of the way they build the services and applications of the cloud. And there is appetites in terms of the resiliency objectives they want to build towards. And one of the things that we do, because we are obviously supporting our customers as they move to AWS, and this is a concept that has been adopted throughout the cloud industry, so it's not just AWS specific, is this concept of well architected. So this idea that you have a set of good practices or best practices that you provide to your customers so they can actually measure how they're building their applications of the cloud and look into whether or not they are achieving the level of resiliency that they want to achieve. And specifically on AWS, we have developed a specific set of best practices for financial services. So we call it if you want to Google it or Yahoo it or whatever, I'm not going to dispute that. Well-architected framework for financial services, and this is being widely used by our financial services customers. But ultimately, as I said, it's a shared responsibility. So we need to look at the way the customers are implementing those best practices, and obviously we have compliance and security experts who work with our customers to ensure that they're building in the most secure way. But this idea of the shared responsibility model, it has to be embedded in the way we think supervision going forward, I would argue.
Skin in the game, basically, both the customer and the cloud provider. Mm-hmm. No, but by the way, this issue of the that supervisors have to touch, it has to be with the credit files. I mean, when I went to the supervisor, I mean, you had to see the credit file, had to see the collateral, you have to make sure the documentation is there. So there is a tradition behind that, just in case. Anyway, yes, please, Marlene.
If I may, so thanks,
Yeah.
Maria, very important message. And I think you really touched on a key element in outsourcing, and this is responsibility. So I'm absolutely sure, and as a supervisor, I need to be of this opinion, of this view, that responsibility cannot be shared, it cannot be delegated, and it cannot, and should also not be outsourced. So, and as long as supervisors and regulators do not have the direct auditing rights over then these outsourcing of the ICT companies, over the big techs, as long clearly the responsibility stays with the financial institutions that have the according license from the according supervision. So I think that's really the key element, or the first key element for supervisors that needs to be really clearly laid out. And we also see, particularly with small banks, we see that the big techs, they get better and better in the onboarding process. So they really are very much aware of the needs of small banks. And so there is also some form of standardization of this onboarding process, making it much more easier for the small banks then also to access the services from the big techs. At the same time, at the end, I believe the responsibility again is even also in those cases stays with the financial institutions, and with that it's also, and that there is a reason, if I may just briefly cite our incident report on cyber risk. So this is mandatory in Switzerland since May 2020, and since then we had about 160 reports on cyber security incidents. and about half of those were related actually to this relationship with third parties. So this is just an indication that on one hand, yes, it mitigates risks, and big techs are important in serving also for improving cyber risk. At the same time, also the outsourcing relationship are definitely also a source of increased cyber security risks. And in that, I'm pretty sure that most of the supervisors will always have a very active role in making sure that this resilience that the financial institutions are responsible of, that this is really assured. Yeah.